Hi everyone, I'm Paul and welcome to my video on how to use ICT's fair value gap to swing trade altcoins. I've had lots of questions in my comments asking if you can use ICT's fair value gap to trade on higher time frames. And so the answer to that question is yes. This is because price is fractal, meaning that it's a repeating pattern. And so in today's video, we're going to apply that concept to swing trading in altcoins. But before we do, if you enjoy this video, please make sure you like it because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Now let's jump into today's video. Now before we jump into any specific altcoin charts, I just want to cover the general environment you want to be operating in if you're looking to short altcoins. Now the first thing that I would be looking at, and the first thing that I look at, is the dollar index. And so the reason why we want to look at this is this gives us a really good taste of if markets are risk on or risk off. Now, you don't really need to know too much about technical analysis to look at this chart and just see how bullish it is, how strong this move has been. So even just with a precursory glance, you can see that the Dixie is super strong, which means that we're going to be in a risk off environment. And so that's really conducive, obviously, to shorting altcoins. So the next chart we want to look at is our Ethereum Bitcoin chart. So this is the price of Ethereum, but with a basis of Bitcoin rather than say US dollars, which is what most people would look at Ethereum in. And so what this really gives us a flavor for, if you like, is just the strength of the alt market, with Ethereum obviously being, the king of the altcoins. And so what you can see is that Ethereum's rallied really strongly against Bitcoin from these levels here, where we have these relative equal lows, this sell side liquidity. And this was all based on the narrative around the merge. So on the back of that, Ethereum has rallied really strongly. You can see we've taken out this buy side liquidity up here. The market's then painted a swing high here before then pulling backwards, and you can see we've taken out this sell side liquidity, these relative equal lows here. And now it's not unusual for price to consolidate at this level. We're at about 50% of this move, so we're right in that midpoint. And the interesting thing from my point of view is you can see that we've painted this bearish fair value gap here. We've now consolidated around it, so you can see we have our break in market structure here. We have a displacement lower. The market's traded back into that zone, and we're just hanging around that now. We've filled in that imbalance, and for me, the next draw on liquidity is definitively lower. So we obviously have the sell side liquidity residing here. We have all this inefficiency here, these imbalances here, and these relative equal lows down here. So for my mind, this is where the Ethereum Bitcoin price is going to draw to, is down towards these relative equal lows down here. So I have a bearish outlook on altcoins in general, and so I'd be expecting across that segment of the market lower prices. So now that we've determined we've got the right environment to be looking for short setups in altcoins, we're going to dive into some specific charts on alts right now, and no better chart to start on than Ethereum, the king of the alts. So we're looking at the daily chart on Ethereum right now, and really what I'm looking for is where has the draw on liquidity been and where is it going to go to. So you can see from this chart, this is that run up that we were talking about when we're looking at the Ethereum Bitcoin chart. So this is on the basis of the merge. You can see the merge was complete, and then after that it was a real sell the news event, and the market's trailed off ever since. So we've taken out this buy side liquidity, relative equal highs up here. The market's traded lower. You can see, and this is on the daily chart, remember we've painted this fair value gap here, this bearish fair value gap. We've traded into it twice, and now the market started to trade lower, and you can see we've taken out this sell side liquidity on the way down. Now you can see again we're painting another bearish fair value gap. It's quite a thin one, but there is one there. We have a break in market structure, a displacement, and you can see the market's then traded into it twice. So for me, what I'm looking for is where is price going to go to, where is the next draw on liquidity. So for my mind, the draw of this relative equal low sell side liquidity down here, and even the lows from June earlier in the year, is just going to be too strong for my mind. And so I'm expecting price to draw down to this level, so I'm obviously looking for lower prices. Now you could actually take a setup on this daily chart, and you could try and ride it down to these levels down here, probably to these relative equal lows here, potentially take a partial and then try and target, the lows from June down here. And so what would that look like? If we were going to set that trade up like this, we would take our limit at the high of this candle here. We'll just zoom in so it's a bit easier to see. And we would have our stop, at the high of that candle here. So we've got our 3 candle formation, 1, 2, and 3. Our limit would be on the high of that 3rd candle, and our stop is at the high of that 1st candle. So you can see if we're targeting the relative equal lows, that's a pretty handy trade. That's over 4.5 R return, 4.65. And if we were going to target the lows, then that's a 6 R return. So that's pretty good. If you wanted to be more conservative, you could be targeting into some of these imbalances here, and that would obviously be, a more conservative trade, but still nonetheless an easy, 2.5 to 3R return, just even trading off the daily chart. So if we're looking for a tighter entry, all we do would be to zoom in. And so for me, I would look next at the 12-hour. That's one of the charts that I like to look at. So if we look at the 12-hour, what you can see is we've got another bearish fair value gap here. And what we start to build when we start to do this, and when we're going from our daily 12-hour, and if we go even further, what we're actually doing is we're laying our bearish fair value gaps on top of each other, and what you effectively get is this darkening area, and so that just creates confluence in that zone, that's a area where we have a higher confidence of going short, because we've got multiple fair value gaps which are now overlapping, and as I said, giving us confluence in that area. So if we wanted to then take this position on the 12-hour chart, again, we just use the same methodology that we always use. So we've got our 3 candle formation, so 1, 2, and 3, and so we'd put our limit at the high of the 3rd candle, and we would use then our stop on the high of the 1st candle. And so looking at the same sort of setup again, if we're sort of targeting down into one of these imbalances, or we've got like a order block down here, that's a pretty easy 2R return from there. And if we're going to target the relative equal lows, that's an easy sort of 3.3R return. And if we wanted to hold out even down to these lows from June, that's about a 4.5R return. Now again, you may even want to get a tighter entry again from even the 12-hour chart. And so what you could do is go down to the 4-hour chart. Now the 4-hour chart's one of my favorite ones to trade, and I've had quite a lot of success there. So looking at our 4-hour chart now, we're obviously just looking at a more detailed view of those higher time frame charts. So this is the same move. So we had this swing low here. We then had the move downwards. So this was the move that broke market structure here. We're obviously crossing through the fair value gaps from both the daily and the 12-hour chart, and then the market's traded back into those zones later. So if we're trying to figure out on the 4-hour chart, we're obviously looking for a tighter entry. How can we actually get set? We've got multiple imbalances here. And so one of the things that I do is I will run a fib from the move that breaks market structure. So you can see this is the move here from this candle to this candle down here. So this is the whole move that breaks market structure just here, and that gives us our 50% level. So we want to be shorting in a premium market, so our premium market is above that 50% level. And again, we don't want to be too greedy, so we don't want to be trying to capture the imbalance up here, because it's just not very realistic. And so what I'll be looking at is the imbalance just here. So if I overlay that now, you can see again we're building even more confluence in this zone. We have a bearish fair value gap from our daily chart, we then have one from our 12-hour, and we now have one from our 4-hour, all overlaying in this particular zone here. So there's a lot of confluence we now have around being short in this area. Now obviously this is looking back at this chart, because this trade's already sort of triggered, if you like. I've got into this just over here, but you can see price has respected this area of confluence really well. So it's traded into it just there, traded through it just here, and then it's come back into it here. We've got this sort of swing high pattern here before it's fallen away. So there's obviously a lot of strength in this zone, and you can see price has then respected that. So again, how would we actually trade this? So our fair value gap in this instance is our 3 candles here, so 1, 2, and 3. And so we'd have our stop at the high of that candle, and we would have then our limit at the high of that candle. And so you can see this gives us a much tighter entry. So if we zoom out and we were targeting those relative equal lows, you can see we're almost getting a 7R return there, which is pretty fantastic. So I actually took this trade on Ethereum. I'm sitting on it at the moment. I took it on the 12-hour time frame, so it was a pretty conservative entry. And my target is these relative equal lows just down here. Now the last setup we're going to look at in today's video is on Atom. Now I'm looking at the daily chart on Atom at the moment, and it's a little bit different to the setup in Ethereum because we don't have that sort of clear liquidity grab at buy side liquidity like we did in Ethereum. But the thing that we do have is this level that Atom has just respected a lot over the course of its trading. So I've just pulled this previous all-time high and dragged it across, and you can see on the daily chart just how Atom has reacted to this price level across its whole history. So it's bounced here twice. We've had this effectively like a massive deviation. We've come down, and as you can see, as the market's fallen away, it's bounced off that a number of times, and it was only after it gave up that level that the market really fell away. You can see we've painted this sell side liquidity all the way down here at about $5.50 before the market has rallied, and again it's come back up to this all-time high figure just here. It just wicked into it and then immediately started to sell off. So I think with Atom, just given the general market situation and just the setup of this stock in particular, I think that we're going to be retesting the lows that we had back in June, and that we should be targeting the sell side liquidity just down here. So I don't have a really great setup, but if we zoom in now to our 12-hour chart, there's a great setup there, and this is the one that I took myself earlier. So zooming into our 12-hour chart, we're obviously seeing more detail than we had on our daily chart. And so this is that all-time high level up here in purple that you can see we wicked into. The market's traded downwards, and then it's spiked back up again. We've taken out the buy side liquidity here. We've painted a swing high, and then the market has fallen from that point forward. You can see we have our bearish fair value gap, which is formed just here. We have our break in market structure there. So this is our 3 candle formation. So 1, 2, 3. We broke market structure there. You can see we came down, took out this sell side liquidity, and we've traded back up into this zone a number of times before the market's fallen away again and taken out this sell side liquidity, and it's now just consolidating at that level. So if we wanted to take this trade, and as I said, this is the setup that I took myself, it's quite straightforward. It's the same as our other setups. We would have our limit at the high of that 3rd candle, and we would have our stop here at the high of the 1st candle. And so the natural places that we would target for this move, this swing low here. So if we were targeting that one, that'd give us about a 2R return. And if we're targeting down here at these relative equal lows down here, that's going to give us about a 3 return. So the way I'm looking at playing this particular setup is taking some partials around this level here, and then holding some to try and take out the lows from June down here. And you can see that is going to deliver about a 6R return. But again, you might be looking at trying to trade on an even shorter time frame and just having a tighter entry. And so what we can do, just like we did on Ethereum, is we can then zoom into our 4-hour chart and just see what kind of setups we have there. And exactly as we did with Ethereum as well, start to build some confluence around a particular zone of interest where we want to be getting short. So if we zoom into our 4-hour chart, we can just see the same setup again with a lot more detail. So we have that move down after we took out the buy side liquidity. You can see we traded down here. This is where we broke market structure there. So this is the move here that broke market structure. That's our bearish fair value gap from the 12-hour chart, which is now overlaid. And you can just see how we've traded into that. So again, like on Ethereum, we're down on a lower time frame. How do we decide which one of these imbalances are we going to trade? So again, what I do is I take my fib and I run it from the top to the bottom of the move that broke market structure here. So this is where we broke market structure. You can see this is the move that breaks market structure. We've got our 50% level there. And so again, like we did in Ethereum, we want to be going short in a premium market. And so therefore we would be using this imbalance here. And you can see that overlays very nicely with the bearish fair value gap from the 12-hour. So again, we're just building more confidence that this is a zone that we feel comfortable being short in and that we're happy to take a position from. And if we were going to go short, what would that look like? So we take our trade setup, and so again, we've got our 3-candle formation. So it's 1, 2, and 3. We would have our limit at the high of the 3rd candle, and we would have our stop at the high of that 1st candle just there. And so in terms of targeting, we're obviously looking at where we think the next draw on liquidity will be. So the most obvious places are this swing low down here, and you can see that coincides pretty nicely with that 1 standard deviation mark just there. So if we were targeting the liquidity just there, that's a good 2.5 return. You can see we're already well on the way to achieving that already. We have these relative equal lows down here, and again that coincides quite nicely with that 2 standard deviation mark just there. So again, building some good confluence, and that's going to give us about a 3.8, 3.9 return. Now, as I said, I'm looking at trying to trade down towards these June lows just down here. So I'm going to be targeting these relative equal lows here for a partial, and then letting the rest run down to target these lows down here. So if we did target the lows down here, that's going to be a pretty mighty trade, and you can see that's about a 7.6 return. So really fantastic if we get a full retrace of this whole move. I hope you enjoyed, and more importantly, I hope you learned something from my video today on applying ICT's fair value gap concepts to trading altcoins. If you did, it would be great if you could like it, because that'll help other people to find this video. And if you're enjoying my content, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I hope to see you next time.